Good afternoon. Good afternoon, everybody. I hope you can see the slides. Hope you can hear my voice if you're joining us for the live session, or if you're on the live stream. You're all very welcome. Welcome to Paul's Monday Market update number 218 for Monday, 16th of March, 2026. I hope you're all well. Hope you're all safe wherever you're in the world you're joining us from, and I hope you've had a good weekend and ready for what is going to be another eventful week in an eventful month in an eventful quarter in an eventful year. For those of you joining us for the first time, Paul's Monday Market Update is just that. It is me flying through as much as I can share with you over the next 25-30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest you might want to add to your watch list, and then having a look at the live markets. It is not a signal service, it's not trade recommendations, it's just me sharing with you what I'm looking at, which might be of relevance and interest to yourselves. As always, you are very welcome here, but just remember that you are always responsible for your own trading decisions. And if you want a little bit more education, this afternoon I'll be running the Active Trades Monday Market Matters webinar at 2 o'clock London time. You can register it on either the website or use that QR code. Today's educational element will be all about trading trend continuations using classic patterns, and you're welcome to join us for that. As always, if you want a little bit more help and support on your trading journey, there is the VTP Trader Accountability Group. Doesn't matter what you trade or how you trade, it's all about building discipline, accountability, and consistency in a small group. You can ping me for if you've got any points, or use that QR code there to take you to the page to join. All right, let's dig into the main thrust. Okay, so I appreciate if you're new to the trading journey or new to starting us, this might make not a lot of sense to you, but bear with me. It's okay. It pretty adds up pretty quickly. Okay, so these are just some snips or some clips of some of the data out of my own weekend work. So I use a model called the STAM, where I'm looking to identify strength, trend, and momentum within the FX indices and commodities market, because I find that when I do that, well, then it actually just basically helps me allocate and focus my time, energy, and resources better for the week ahead. So what's this telling us, and how can we use it to help us? Well, we are into week 12 of the year already, ladies and gentlemen. Where's the strength? Where's the weakness within those FX and indices and commodities markets?
Fucking headbutted her one, elbowed her to the neck, got her in a headlock, broke her neck, manager's come running over, I've got the manager by the scruff of the neck, I've gone, give me. The manager's on the floor, red nose, fucking knocked out on the cold. Security.
Yeah, sorry about that. I was an idiot, sort of wanted to sort of ruin it for everybody else, but hopefully that hasn't made up too much noise. But as I was saying, the STAM is all about identifying the strength, trend, and momentum. Looking at here, starting for week 12 of the year. Where's the strength? Where's the weakness? Well, we continue to see the Aussie dollar at the top of the pile, along there with the Swiss franc. Okay, so this is from the week I do at the weekend, and I'll show you the sort of kind of the latest one just before we've come on here today. Aussie dollar we're going to look at a little bit later because it's interesting. Aussie dollar is one of 7 of the sort of major central banks, okay, that we're going to see have their central bank meetings this week. So they're the first one sort of overnight into tomorrow for the Royal Bank of Australia, their rate statement. People are expecting, okay, and working into that an interest rate hike from them, and that sort of basically has carried an awful lot of that Aussie strength over the last few months. But what we'll actually do is we'll take a little bit of a look at actually how the price action is shaping up on that. So when we switch across the live markets, we'll look at that there. We've got Canada. Okay, they've got their Bank of Canada rate statement on Wednesday, although there's no expected change. You've got the FOMC on Wednesday evening. They've got no expected change. We're then expecting Bank of Japan on a Thursday morning with no change. Here in the UK, we'll have the MPC. Okay, they're the Bank of England's. conference and statement. We're not expecting any change there. Same with the Swiss National Bank. They are this sort of Thursday. And then to finish off the day, we've got the ECB with their statement and press conference. So it is actually going to be, a bit of a heavy-hitting week in terms of hearing those central bankers and hearing what they've got to say. But there's only really the RBA that we're expecting to see a shift, and in that a hike. Of course, what we will all be interested to sort of see is actually how they interpret the kind of recent events, whether those recent events have any particular say or influence upon their decision making going forward. What we had seen, over the last couple of weeks is that the kind of the theme towards interest rate cuts, certainly kind of in like a UK and the US, they may be tempered due to the sort of inflationary aspects of the kind of spike in energy prices that we've seen over the last couple of weeks, but more of that later. But at the moment, as I said, we're still seeing Aussie top of the pile, Swiss franc top of the joining it there as well. Canadian dollar has also been strong in third place. Once again, that's not really a massive shock based upon what we've seen in the energy sector. And the US dollar is kind of climbing the boards there, from being bottom of the pile a couple of weeks. It continues to work its way up, and certainly on the shorter term STAM, it basically, it is this kind of pushing its way there to the top. The UK invariably is sort of has been sort of hitting there kind of at the lower end of the STAM, and if anything, I'd say that's only really been held up there because of the weakness that we've seen in euro, but also the weakness that we've seen in Kiwi dollar. Kiwi dollar rolled over quite significantly over the last week or so, and we'll be able to see that in the charts as well. With Japanese yen just doing its thing, all right, as usual. Certainly, when I look at the UK and the sterling, what we've seen is that we've continued to have most of those sterling pairs being in a sales environment. Same with the euro as well. All right, the kind of only noticeable changes, kind of sort of pound against New Zealand dollar has switched to a buying environment, and that probably just, as I said, just inflates the sort of how quickly the sort of Kiwi dollar rolled over towards the end of last week. But we'll look at that. Certainly, since the market's open, what we've actually seen is I would suggest that that's a little bit of a risk on, all right, or maybe it's more just a kind of the risk off sentiment has been tempered. Certainly, what we have seen is Aussie and Kiwi and euro and sterling, have had an okay start to the week, and that I think is more to do with basically sort of dollar being sort of sold off a little bit there. We saw real strength towards the end of last week in dollar. Not unsurprisingly, but perhaps maybe there's been a little bit of a tempering of that as we start of this week, and of course that can change. We've got a huge amount of, as I said, central bank data and other economic data being released, and then of course we have the impact of the sort of ongoing war. And on top of that, of course, any particular comments that Trump might particularly like to say, which has a huge impact at the moment. When we look at sort of kind of the indices and commodities, well, when I look at here, what's that telling me? How's that helping me? Well, not unsurprisingly, and pretty much all of them are in selling environments in terms of the sort of major indices, with the DAX being in a kind of strategic sell. Also, as we'll see in a moment, when I look at the kind of the weekly charts and the weekly price action, that's given me some particular candles. There's an awful lot, of candle price action there that sort of draws my attention as I want to see how is that likely to unfold over the over this coming week. And is it a week where we are going to see continued volatility spikes? Is it a week where we're going to see a shift, or is it a week invariably with let's say the kind of energy running the sort of energy running the sort of the game, with the central bankers speaking that actually everybody's a little bit sort of hands off as they try and scratch ahead and work out, where do we go from here? Certainly, as I said, if I just look at the automated STAM, which is a plugin that people on VTP Stage 2 have, just looking at that to see, what is the kind of latest take on the strength and weakness within certainly those FX markets. Well, I still have Aussie dollar still at the top of the pile, but as you can see, the US dollar has been strong, and a lot of that is to do with the kind of the 4-hour charts pushing their way through. They've kind of overtaken Canadian dollar, pushing that into third. What we have seen is Swiss franc has kind of been the one that's probably taken the brunt of that. Okay, it's rolled over a little bit, certainly on the sort of shorter time frames there. Sterling, yeah, it's in the middle. All right, it's doing nothing, and what we see is that basically Kiwi and Euro kind of like sort of propping up the sort of the pile of the STAM at the moment. That's what we're particularly seeing there. Okay, so there's a little bit of look at what's going on in terms of strength and weakness within FX indices and some of the commodities markets. Let's now have a little look at a few charts of interest. So if you'll just bear with me for a moment, what we're going to do is we're going to switch across to the sort of the live markets and take a look at what those charts are telling us. So just bear with us for a moment. Okay, so we've got quite a few to talk through today. As usual, my charts are all pretty much the same. Okay, weekly charts, uh, blue 20 period moving average, red 50, green 200, and fractals. Nothing really terribly esoteric there. Who is this? What we're looking at? This is RCAT, okay, Redcat Holdings. They have got their earnings on Thursday after the close. Who are they? Well, I've been interested in for a good while because primarily they are a drone manufacturer that is focused on the defense market, okay, and not unsurprisingly with basically what we're seeing going on in the Middle East and Ukraine, they have been a huge interest, okay, to investors. All right, so and not unsurprisingly, they've been gaining more attention as kind of the demand by the military for tactical UAV rises. They have also kind of fed into kind of like a broader defense technology and battlefield automation theme that's been going on, and the price action has been, as you can see, a little bit what you would expect from a kind of a small cap that is riding the kind of the present narrative, riding the momentum of that. Also, featured a lot in the news at the moment, but then also equally, as you can see yourselves, there is kind of, great swings up also by sort of drift back. Okay, and you can see, and I started to get interested here where we can see is that price was just respecting 50 period moving average, and as you can see, there's been some really quite big swings. Okay, but also some kind of real fallback. So it's a kind of for me, I'm not a sort of intraday equities trader. Okay, there are people much better at that than me. This is one to sort of for me to sort of, as I say, kind of ride that theme around defense tech and automation and drones, etc. $10, all right, seems to have been kind of a pivot line there. Okay, so as I said, I'm expecting this to continue to move, but as you can see for yourself, it's not a if you're looking for a kind of a smooth trend, this is not, but it's one that's of interest at the moment. Okay, next WFC, Wells Fargo. Why are we looking at this? Why have we got any interest in this at the moment? Well, those of you who've joined us on a regular basis know that whilst we've taken lots of look at energy and defense stocks and everything else that's going on in the world, one of the other kind of smaller, quieter stories that's not really been getting as much attention as you might think has been the kind of the challenges within the private credit market. Okay, we had a look at them. I think BlackRock last week. We had a look at Jefferies a few weeks ago. But I was reading something at the weekend showing that actually it's Wells Fargo who have the of all of those kind of major American banks that actually do have the sort of the biggest exposure to it. So I wanted to have a look at the chart, and as you can see, the chart's pretty interesting in itself. As I said, a weekly chart that has been pretty much, riding that overall trend there once again, that kind of weekly 50, all right, acting as great support until it didn't. Okay, great support until it didn't. So they are. Not only are they just private credit, but Wells Fargo, Wells Fargo, they are a major US bank, right? And they have benefited from, let's say, those kind of extended higher interest rates. That has supported their kind of lending margins, but they have they are kind of still sort of trying to rebuild trust, rebuild a bit of a regulatory, what would you call it, goodwill, following sort of, let's say, past scandals with them and other elements of the American financial system. But they also are a pretty good take on kind of banking sentiment, sort of the strength or health of US consumer credit. And so basically the moves in Wells Fargo will quite often they will track those kind of Fed rate expectations and the overall US economic outlook. But at the moment, as I said, I also see invariably that they're kind of starting to take a bit of heat from from that sort of the private credit issues. And as I said, the 50-period moving average did not act as support there at the moment, as you can see that invariably, we flipped it. Okay, we flipped it over the last week or two. Also, we cracked $80 from being up here at 98. And as you can see, kind of last week's was pretty much a pretty strong sell-off there, isn't it? And so if that's to continue, well, then, I start to look at us down here towards kind of $60 in the weekly 200-period moving average, right? And is that a bit of an indication of an overall sort of sentiment of US economy, US banking, US financials in particular? So, as I said, you might just want to add that to your watch list to see how that plays out with the sort of private credit issues sort of bubbling along. On the flip side, next is basically a UK bank, NatWest Group. Okay, many of those in the UK, will know of them. You might even use them. Okay, you might be aware of them. Listen, I'm just going to zoom. As we can see that actually bank, that has been a great weekly trend. Okay, that has been a fabulous weekly trend. You hear me say it all the time. To those of you at the start of your journey, okay, or sort of looking at sort of longer term position trading or investing. Good trends don't happen anywhere near as often as we'd like. They may only happen 20 to 30% of the time. So when you're in a good trend, don't fight it. You find a way to ride it. Okay, and that has been a great run there. Okay, so for those of you watching who don't know, they are NatWest. They're kind of a UK sort of retail and commercial bank that are exposed to UK mortgages and domestic growth. So people might sort of say, well, what's going on in the kind of UK property market? What's going on in terms of UK economy growth? What has helped these guys is because they've been exposed to those to kind of UK mortgages, etc. Is that the higher the Bank of England has held rates, that has helped their profitability. All right. However, they're still influenced. They are still a bit of a reflection of kind of UK political and regulatory attention. So these guys are going to be sensitive to UK interest rate expectations now, and also kind of housing market sentiment. So, if we're not getting cuts and that and it looks like interest rates will hold higher for longer, that would help them. But equally, the housing market sentiment, and certainly from conversations just even with my own sort of acquaintances, there's nobody's got really anything terribly good to talk about the housing market at the moment. And so I see us here. We're at that kind of weekly 50, which acted as support of a sort, okay, back in April last year, but that was the kind of tariff tantrums. The question becomes, can that hold again? All right, you've got 600 pence there above it. All right, is that going to act as resistance? Are we going to bounce off here? I always look at a little bit of a scenario. Could we bounce off the 50, come up to sort of 600, hit the 20-period moving average, and if we got a rejection, that would for me would be a kind of a scenario of kind of much further lower moves and stuff. So as I said, want to add to your watch list and see, does the 50 hold as support, or is it just a bit of a dead cat bounce before it rolls and moves lower? Next, XLF, which is the ETF for the financial sector. So we've looked at Wells Fargo, we've looked at NatWest. Now, admittedly, XLF, looks primarily focuses on large US banks and kind of large US financial firms. People would see it as a bit of a bit of a macro trade on the health of the overall financial system, and elements of it are kind of linked to sort of yield curve dynamics and recession risks. So anything where there's talk about rising rates, anything that perhaps might be about steepening curves would typically support financials. But if you've looked at any of those kind of major US financials over the last couple of weeks, they've not been doing terribly well. Certainly, once again, this had been in a good, strong trend, but we had already kind of topped out going into the start of the new year. We then invariably, got beneath the close beneath the weekly 50, and we have continued, and now we're sub $50 as well. Okay, so now an element of that would be a case of overall risk sentiment, a case of that overall, as I said, just an element of that private credit issues that have sort of not really sort of captured the sort of main news themes, precisely because everybody's focused on the kind of bigger issues of the war in Iran. But certainly, okay, now that we're sub 50, I'm kind of curious to see, well, hang on a minute, does 50 now sort of turn from being support into being resistance? And is that an indication of overall sort of views of a recession risk and kind of the US economy in general? So it has certainly worked its way down there. And as I said, I'll be watching 50 now as a kind of as a level on that. Talking of other ETFs, okay, so this is OIH. So this is the oil services ETF, okay, pretty kind of relevant to what we're sort of looking at in the world going on at the moment. So if you're not sure what this is, it's an ETF that sort of tracks oil field service companies that support drilling activity. Okay, so of course they tend to benefit when energy companies they're increasing capex. Okay, they're spending on exploration, but also they are highly sensitive to cycles within the oil price. Okay, so they tend to outperform when sort of, as I said, investment in energy is expanding, and it has been quite some turnaround, as you can see. Okay, over the last year, but I look at this here now, bang, all right, $400 mark, big bearish engulfing candle, big bearish key reversal candle. Now, admittedly, of course, that is a case of, as I said, it tends to rise when energy investment is expanding or exploration is spent, being spent, funds being spent on that. That is not the case, is it, over the last couple of weeks based upon what we see going on? And so no surprise that perhaps there's been just some great profit taken there, $400 after a year's great run. And it has been a fantastic run, that, hasn't it? The question is this just a temporary sort of bump in the road, or is this kind of indicative of a sort of a wider problem that we need to be aware of? All of this, I think, is kind of driven by the war in Iran, Trump's comments, and the impact of that in terms of, are we gonna see a war that lasts for a couple more weeks, or are we gonna see it for a war that lasts for a couple of years? That will be the sort of thing that that everyone will be interested in, and that will be the thing that has that impact on those kind of on those cycles in terms of capex and exploration. But as a technical guy, I'm looking now, right? Well, 400 is clearly a top there. I'd be curious to see, well, actually, do we get a bit of a relief rally to form a double top before it sort of comes back down to the 20? That's the scenario I'd be looking at the moment, but that can all change based upon on well, one comment from Trump. Really, that's the world we live in. Next, GDX. Okay, this is the gold miners ETF. All right, so this is all about as the name implies, a basket of major gold mining companies, and so lots of people will have traded this as a bit of a leverage play on the gold price, and it kind of well, it kind of benefits during risk-off environments, but I think basically what has also happened is that this, as I said, it's been a bit of a leverage play in the gold price. And once again, you can see that, that has been in a fantastic trend, isn't it? That has been from being down here, okay, in the low 30s to, just under 120 to 116. Okay, that has been quite some run. But the thing that started to get me interested into this is that, here we are, $100. What we printed here was a real bearish engulfing candle, a bearish key reversal candle there. Okay, really pushed to new highs, closed beneath its the low of the previous candle, and also closed beneath that big round number. I quite often say to people is that if a key reversal isn't the top can very often be nearby, because actually what you saw is it flushed a bit higher, and I think that's just kind of geopolitical sort of volatility. flushed its higher, and then it printed another key reversal engulfing candle again. Once again, okay, whilst we didn't close beneath 100, last week we kind of dropped beneath it. I look at this as a domino candle. It really did close on its low. So I would expect it probably to sort of, on an intraday basis, drift down to the 20. And then once again, the scenario I'd be looking at, well, does it have what it takes to basically bounce to 100 before it kind of rolls lower? Okay, that will invariably have have a huge impact. Okay, based upon what we see in terms of the overall price of gold, which leads into that overall sentiment towards anything to do with gold. Part of that being gold miners. Another one of interest who have they've got their earnings after the close tomorrow evening, Tuesday, is Oklo Inc. Okay, kind of I've been curious about these for a while. Okay, I think it's the other side of that kind of energy play. Whilst everyone's looking at oil, Oklo are a kind of a nuclear startup. An American developing small modular reactors. Okay, so I was kind of really curious about this when Rolls-Royce got involved in them. But this is, as I said, this is kind of an American advanced nuclear startup, right? What they have done well out of is that, of course, this has been an interesting. This has been an interesting move here. I think this was around about $20 or so when I started to get involved. Small modular reactors are of interest anyway, but it's kind of like a what would you call it? Maybe second, third, fourth order consequences, tertiary kind of consequences, proxies for the theme and narrative we've had over a couple of years of basically AI. Well, of course, if you need AI, you need data centers, and if you need data centers, you need power, and if you need power, you need it to be basically regular power. Okay, you're not getting that off recyclables. In that sense. Okay, what you need is you need constant on-demand energy if you're going to run these data center powers. So Oklo have kind of, as you can see for yourself, having risen from like kind of 20 to 190, they really sort of, have really sort of, run that trend, and fair play to them. But equally, as you can also see, that like any kind of a startup, it's what goes up comes down just as quick. And so here we are, we've sort of, fallen beneath 100. I'd say 120 sort of then turned into that sort of dynamic resistance. We've got beneath the 50, and we're sort of trickling our way down, and I'm kind of intrigued to see, lots of wicks there to the north side. Okay, there's also, I think, looking at it, there's quite a few big sales by directors involved. So I think there's a case of that. I'll be curious to see what the earnings are like tomorrow night. But invariably, there's also a case of it's a startup in an exciting area, but one that, as you can clearly see, has large swings that are driven an awful lot by sentiment for risk, but also sentiment for nuclear energy news. So yeah, you might want to watch to see how they play out this week. And finally, going from like a kind of an advanced nuclear startup to a very what should we say, kind of blue chip old school stock, FedEx, right? So the global logistics giant, right? But I'm interested in them because they are viewed as a barometer, global trade activity. As you can see, they have done well. All right, they have done really well. Okay, over the sort of the last few months, in spite of all the sort of the kind of tariff nonsense, they have been back in it because I think they wanted to try and sue Trump for the kind of cost of the tariffs to them and their business, whether that's a genuine case or just basically attention seeking. I don't know. People smarter than me can work on that, but what we have seen is that FedEx, as I said, they're that kind of logistics giant. So it is a barometer for kind of global trade. It is also a bit of a barometer for like e-commerce demand, sort of manufacturing cycles. FedEx, who've got their earnings on Thursday after close, well, they can kind of sometimes be a bit of an early signal for momentum or the lack of it in kind of in global economic activity. And certainly you can see there over the last couple of weeks, having gone vertical, gone parabolic, which is what I always warn traders about. We can see we had fallen away and drifted down lower from that as well. Okay, so as I said, Thursday evening got their earnings, and as I said, use that as a bit of a barometer for kind of the global economic momentum. We can see how that particularly looks to play out itself. Okay, so there you go. There's a few charts of interest that you might want to add to your watch list. Let's have a look at the live markets now, see what the score is, see what's happening. So just bear with me for a moment, and we'll sort of just I'll just bring them up for us now. Okay, so this is just one of my profiles here. So I've got Dow on the weekly, Nasdaq on the weekly, S&P 500, Russell on the weekly, oil, DAX, Nikkei, and the FTSE. Okay, so naturally, let's start with oil. All right, naturally, let's look at that on that weekly chart. Boom, boom, boom. The kind of madness that we've seen over the last couple of weeks. Last week, having opened last week, gapping up and then falling down, which last Monday was kind of probably the sort of biggest, weirdest day I've seen in oil trading. Well, I've seen in oil trading north of $0. For those of you who remember the when it went negative during the start of the COVID lockdown, but actually, as you see, having dropped, well, then as the kind of as the war has been seen to sort of go on and maybe not end as quickly as people had hoped, that pushed that oil price up there. And well, that's where we can sort of see it sort of kind of working its way around there. So if we just go to a lower chart this morning, we gapped up, we've kind of fallen away, but actually what we've seen is we've kind of drifted low on an intraday basis. Now, of course, one tweet from or one comment from Trump or from somebody else can change that, but I think maybe that feeds it into a little bit of kind of the sort of risk on mentality, all right, in terms of what we saw in those FX markets this morning, but also a case of, maybe that's a little bit of what you call a relief instead of a relief rally, a relief fall there for oil. But as I said, that could change pretty rapidly this afternoon once American markets open. What I'm kind of curious is as I said, we'll go through this quickly, is Dow. The Dow is sat on the weekly 50, okay? Came off from its 50,000. It's sat on that weekly 50 there, okay? And that's what I sort of said earlier, that the weekly candles are kind of interest. Weekly 50, daily 200, it's sat on it. Is that going to act as support there? We're going to get like a double bottom there. Is that going to act as support for it, or is it going to roll its way over? Nasdaq, okay, the Nasdaq is not on its 50, but certainly what we've sort of spoken about for the last couple of weeks is that it has been grinding its way lower. I'd say that is pivoting around its daily 200 there at the moment. S&P 500, okay, we talked about that coiling up and falling lower, and as I said, it's not on its 50 on my charts, but clearly, all right, it has been worked its way down to the daily 200 there, and the question is that going to act as support now? Can that be relied upon to act as support? And if it isn't, well then, I think we go much, much lower. And the Russell as well, having sort of double topped nicely there in the weekly, it's dropped its way down. Okay, the daily chart, as I said, it bounced strongly the first time off the 200 period moving average. Can it do it again? All right, that's what we'll be seeing. Can it do it again? And maybe it's something Powell will say, okay, this week that will have an impact upon that, or Powell or Trump. Close to home, DAX. I look at that DAX now on the weekly chart. We put in a double top there. We dropped. We're beneath that 50 at the moment. I look at that as a flip of the 50. As in, we closed beneath it, came back up and fell lower off it. Okay, so the daily chart is messy. Even though we had that kind of that would have been sort of last Monday where Trump sort of told everybody the war's almost over and everybody had a little bit of a strong rally, and then we fell away. And that's where we are at the moment. I'd say that as the kind of the March trend is still lower on the DAX. Close to home again, FTSE. All right, we can see FTSE weekly chart had been a grand trend, but that has come off, and where we are last week is down to the 20 period moving average, just above that 10,000 level. The daily chart, that's the Mad Monday, but you can see we just kind of drifted lower and beneath that daily 50. STAM has been speaking this morning and convincing nobody as per normal, all right, but that's what we see there. There's as I said, there is so much happening in terms of geopolitically in the world, but then also so many central bankers speaking, including Mr. Bailey later this week. You also have to wonder whether we just actually, having had all this volatility, market surge, they then rest and then wait for the next catalyst to surge again in whatever direction that might be. We looked at GDX, the gold miners. We look at gold itself. To me, on the weekly chart, that looks like a very scruffy double top there. We're sat above 5,000 there, okay? Sat above 5,000. If I go down to the daily chart, see how we're sat above 5,000. The daily 50 is there, which we bounced off about 6 weeks ago. Is this enough to hold support? All right, is this enough to hold support? That's what I think the world and his wife will be waiting to see. Because if it doesn't and it cracks it, well, what's that telling us about the overall party? So when we look at silver, silver has been similar in that we are sat down on 80. Okay, now last week, we bounced between 80 and 90. It was quite some moves in silver on the daily chart, but there, the daily chart, I see that sat on 80. Okay, gold on 5,000, silver's on 80. The other precious metals are not too dissimilar. Is it a question of that? We're just waiting for a catalyst this week, okay, to see what the next possible move is. Also, admittedly, some of those elements are, of course, being driven in terms of oil, gold, silver, and others by what's going on with the dollar. So we'll have a quick look at dollar, quick look at Aussie, finish on sterling as always. I appreciate I've overran a little bit normal, but there is an awful lot going on in the world. There's an awful lot that I'm hoping to share with you. All right, so dollar profile. So Aussie dollar on the daily, Kiwi dollar, Euro dollar, dollar CAD, pound dollar, dollar yen, dollar Swiss franc, dollar index. Okay, let's have a look at the dollar index here as always. Dollar index weekly chart above 100. We've just bounced and broken and flown our way up there. Okay, and what we'll do on that, I just need to update. This is on my This is not the here we go. This is not the these are just a different chart package from the one I use on my other trading computer. Let me just boom. There we go. So where we had kind of finished on Friday, kind of above 100. Well, actually, what we can see is there you go. The 4-hour chart, we kind of gapped down a little bit. I mean, that was last week. And I got a piece of this. Okay, I was long. I was kind of long dollar Swiss and dollar yen. Okay, and I think dollar CAD off this as well. All of these are kind of the nice bounces off the 50 period moving average with a kind of bullish engulfing, bullish key reversals. It's rare that you get that as part of a pullback. Okay, but we can see how that ran last week. But invariably, we've sort of kind of drifted lower, and this morning has been that case of what we've seen is, look at how they on that's a 30-minute chart. We've gapped down, pushed up to fill the gap before falling away there. Same like oil, same like gold, silver. It's almost like everybody's waiting for the next bit of data. All right, everybody's waiting for the next sort of announcement on the war to sort of give them an indication of where we're going. Right in front of all of that, right in front of, as I said, all of those central bank speakers. So it's going to be an interesting week, ladies and gentlemen. All right, it's going to be an interesting week. So yeah, so we've had dollar strength, but this morning has been a little element of that rescinded, and you can see that in those charts there. And as I said, I appreciate I overrun a bit, so I'm going to scoot on. And as I said, we've got this is Aussie, Aussie dollar, pound Aussie, Aussie CAD, Aussie Swiss, Aussie yen, Euro Aussie, Aussie Kiwi, ASX. All right. So one of my best trades over the last few months has been basically buying the strength of the Aussie and selling the weakness of the Japanese yen. That has been a fantastic trade there. Okay, what we can see in 2026 is basically buying Aussie, selling euro. Okay, it's been a great trend, as has the same for pound, selling sterling, buying Aussie. Even the kind of Aussie against the US dollar, Aussie against Canadian dollar, Aussie against Swiss franc, Aussie against the Kiwi dollar. Okay, and as I said, we are expecting an interest rate hike overnight. But what I'm curious about is just look at the price action from last week. Okay, that Aussie dollar there in the weekly chart, that's printed. There's a kind of a false breakout pin bar. Even Aussie against Japanese yen was a little bit of a sort of call that maybe a shooting star. Pound against Aussie, right? Was a little bit of a you'd call that false breakout hammer. Euro against Aussie, well, that's an element of that kind of weakness there. But even Aussie against Canadian dollar, little bit of a kind of false breakout rejection candle. Aussie against Kiwi dollar went through 120. That's, as I said, that's more to do with Kiwi weakness. Aussie against Swiss franc, okay, it tried to push up, but it didn't have it. And I wonder, is this a case of, people have been buying the room and but they're selling the news, or maybe people just took profit in front of the big boys, took profit in front of the sort of the Royal Bank of Australia and everybody else, and is sat waiting to see that. But I just noticed that doing my own analysis of the week that we've had great trends in Aussie. It's been great trade, okay, but as Echo and the Bunnymen sang in the 80s, nothing ever lasts forever, okay? And you have to wonder, is this a sign here that perhaps that basically is a case of people have been buying the rumour, but they'll actually sell the news? So watch to see how Aussie plays out over the remainder of this week. And finally, let's finish with British pound as always. Okay, so we can see that sterling, okay, as I said, was it's been the lower part of the STAM. Pound dollar on the weekly, euro sterling, pound Aussie, pound Canadian, FTSE, pound Kiwi, pound Swiss, pound yen. As I said, we've just looked at Aussie, all right, so we can see what the score is there, what's been going on there, what's been happening with cable. Okay, lots of swings going on there, lots of swings, but a couple of weeks ago, we came back to the 50 and I was looking, could it bounce off here with that rejection candle? The answer was no. All right. So, we look at that because actually the price action now, I was looking at it, is like a daily double bottom with a bullish engulfing. I thought, is it going to get it just even like a dead cat bounce, a relief rally? But no, you can see sterling weakening, dollar strengthening. All right. That's what we've just been seeing there. Okay. And yeah, we've had a little bit of a respite from that. Okay. But it's still a case of sterling weakness, dollar strength. That's the way I'd be looking at it. Even pound against Japanese yen, and we talked about great trend, come off its tracks, hit the 20, and then basically kind of working its way up. But even if you look at last week there, is that a case of, this is kind of a Vulcan short, a kind of a ski jump? What I've got kind of interested in there is yen was weak because, of course, any pump in oil price has a huge impact on them. But even with that, it still managed to having, this is the 4-hour chart, sorry, we had a fantastic start to the week, but actually at the end of the week, sterling was rolling off and yen was strengthening. That's what we've seen there. Pound against yen, pound against Swiss franc. Weekly chart been in a great trend, okay, and you would have expected that to continue, but we've talked about this a little bit. The SMB have been quite open that they have been engaged in shenanigans, all right, to basically weaken the Swiss franc. So even though the world and his wife would normally be piling into Swiss franc as a kind of risk-off play, that has not been the case. And even though sterling has been weak, it has managed to sort of rally in March against the Swiss franc. But as I said, a lot of that is to do with the SMB shenanigans more so than anything else. And if we finish as always with euro against sterling, well, it's just messy because both euro and sterling are messy. Okay, we had the weekly drift flag pattern into the 15, bounced off it nicely, but then as you can see, the last couple of weeks that euro has kind of rolled over and fallen away there. And if we look at that on the daily chart, if you look at that for March, whereas February on the daily chart was literally, we had a really nice bang, bullish engulfing, bullish key reversal, which just showed us a kind of a month of of rallying on the daily chart. Well, March has been quite the opposite. All right, yeah, and I think that has been more to do with euro weakness than sterling strength in there in that particular case. Okay, ladies and gentlemen, let's draw it to a close there. I appreciate that we overran quite a bit there, but there is an awful lot going on in the world at the moment. There is also a really busy week ahead of us, okay, in terms of all those central bankers speaking. As always, okay, I hope you found that a little bit helpful, give you a little bit of insight. As always, okay, make sure that you are on top of your risk management this week. Make sure you're on top of the news flow, the order flow, okay, and that you tread carefully because I think there's going to be all sorts of swings and volatility going on this week. I hope you have a fabulous trading week, okay? Have a great week, everybody, and I will speak to you next Monday. Take care and trade well. Cheers.